Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Jonathan McNulty of Haus coming to us from San Francisco. How's your day going, Jonathan?
Going great. How's yours?
Good. It's been a little chaotic, usual startup stuff. So what is Haus? H-A-U-S. I love it.
Yeah, Haus. So Haus is looking to make home ownership more flexible and affordable for folks. We took a look at what's happening today in the market, and if you look at the data, you've got millennials out there spending a disproportionately large percentage of their income on rent, finding it very difficult to get into the housing market, to purchase, to own. And we took a whole new look at how we could create that market and help people.
Interesting. It's funny. I'm doing this podcast interview with you like a week too late or a month too late. We just bought a house, just moved in last Thursday. And this is our house, which it took us 5 years. I'm not a millennial, I'm Gen X, and my wife is too, right? And both of us work hard and everything. It took us 5 years of house shopping, getting rejected a million times, not even coming close to like being the winning bidder to finally buy a house. So I'm very curious, maybe let's get into the details of how you do what you do and kind of the, what it all is. Please.
Yeah, absolutely. So I would say it is not too late for you. You can still be redeemed. We can actually help you restructure your current financing situation and probably help you save about 30% on your monthly payment compared to a traditional mortgage. So
interesting.
Yeah. So what is Haus? We looked at how people are buying homes today, and we said it's very risky, and it's a bit old school. So you go in and you get a mortgage. Down payment on average is 5-6% these days, which is pretty low. And you're essentially purchasing all the upside or downside. And when you think about what that means for people, you're basically like buying stocks on a 20-to-1 margin, which if the market goes up, that's fantastic. If the market goes down, you have 2008 all over again, and a lot of people really hurting. And so we said, how can we reinvent this? How can we try and help people with both those down payment requirements, but also the monthly payment, the cost of carrying that asset? And so we've completely revamped how owning a home should look. So instead of going to a bank and a traditional lender, you come to us. You get pre-qualified. You buy what you can afford. So if you can afford 10%, 20%, you buy 20%. We buy the rest. And every month, you have a fixed monthly payment. It buys equity back from us. The major difference is it buys it at the current price. So if the price goes up, still have a fixed monthly payment. It buys equity back from us. Same amount of dollars, a little less percentage. If the price goes down, same amount of dollars, slightly larger percentage. And what that does is it allows us to participate in some of the appreciation or depreciation. And because of that, we can reduce your cost of carrying the capital. So you don't have to pay a high interest rate. You come in to partner with us, and your monthly payments are about 30% less on average compared to a traditional 30-year fixed mortgage.
Interesting. Boy, there's a lot to unpack there. I like that analogy of kind of like buying a house today is like buying on margin. Let's take it using some simple numbers. So I find call it $1 million house. I've got 10% to put into it.
Yep.
And Haus is actually buying the other 90% of that house.
That's right.
Of the house. HOUS is buying 90% of the HOUSE. And then I'm paying I guess this is where I get confused. A rent, a mortgage, what am I paying every month? And I'm allowed to live in the house, and over time.
So you're the owner. You own the house. You're on title. This isn't rent to own. This isn't sale leaseback. This is traditional home ownership in that you own the home. The difference is that instead of paying a mortgage, which consists of two things really, a principal payment and then an interest payment, you come in and you partner with us and you buy equity back from us. So that's part of your payment. And then the other payment pays what we call an option payment, which is the which is really the cost of carrying that capital for us. And but because you're buying that equity back at whatever the current price is, we can drastically reduce that payment, and so it ends up just being much more affordable for folks. The other thing it does, which is really interesting, is because we're valuing the home on an ongoing basis every month, right?
Yeah.
So we have partners that do this. We partner with great lender grade valuation mechanisms, and because we're valuing it ongoing, you can buy more at any time. You can come in, you get a bonus at work, you click a button, you buy more equity at whatever that price is. Or same works in reverse. You got to put your kids through college. You need to tap that equity. You click a button, you sell equity back to us at the current price. Money hits your account the next day. So it's fully liquid. So it allows you to buy into or come out of your house at any given time at whatever the current price is, to make it much more dynamic and friendly for consumers.
Interesting. So I guess from your perspective, from Haus's perspective, from your company's perspective, is this just sort of a long-term bet on the appreciation of real estate, and I guess, how are you guys making money? It's not from the interest so much, but more from the appreciation, or what?
Yeah, so because we've basically shifted some of the income away from the sort of the what we call an option payment, or in a traditional mortgage would be an interest payment, and into home price appreciation, we are betting on both. So we're betting though that these markets in the long term, we're taking a very long-term view. We believe that they will continue to go up, not by a lot, but go up enough where we can subsidize the cost of carrying that capital. Yeah. And what we do believe on top of that is, if you think about how consumers typically buy and sell homes, they don't decide exactly when they want to buy in the perfect market. Typically you buy a home when you have another child, or you need to move to a better school district, or you have a job change, or something in life happens, right?
Sure.
And so that makes it increasingly difficult to time the market appropriately. So going off and borrowing a bunch of money to buy on a margin, and then putting yourself in a situation where you can't necessarily decide exactly when you want to sell, is very precarious. And so we said, remove that risk, put that risk into the hands of investors who can take a much longer term view. There may be situations where we go in partnership on a home and lose money, but we'll take that money, we'll reinvest into that market, and then hopefully that market recovers over the long period of time, and we can deliver really good returns for our investors.
Yeah, interesting. So what's the backstory? Where'd you come up with this? Were you either in real estate finance, or were you frustrated with buying a house, or both?
Yeah, all of the above. So my background is, I was at Trulia, I was at Zillow. I grew up in real estate. My dad was a developer. It's in my blood, basically. Mm-hmm. But the original idea for this actually came from Garrett Camp, who was the founder of Uber. He founded it here at Expa Studios, really solving a slightly different problem at the time, where he was getting frustrated with the lack of transparency into the actual purchase process. And so the team had developed a lot of really interesting technology to create transparency, and then actually to digitize a lot of the transaction experience itself. And what we found going through that process was, when I joined about a year ago, that the lack of transparency is definitely a problem. And the fees associated with transacting on homes is definitely a problem. But the largest problem is what we're seeing and what we're trying to solve for now, which is lots of money being spent on that down payment, and it's hard to save for that, and lots of money being spent after that, and what it takes to actually carry that home, which is why when you look at the data, 68% of millennials who actually do purchase today regret it because of cost.
Interesting.
Which is shocking. So we developed the idea internally, really just after helping a lot of people sell their homes and listening to what their major pain points when they were thinking about buying, and then spending close to a year with legal teams and finance teams, and figuring out how we can actually create an entirely new way of owning a home, and how we can do that playing by all the rules. And we put that whole program together, and then raise money to help build it.
Very interesting. Okay, it's fascinating. I have a million questions, but maybe we'll get back to it on the end, because I do want to get into the fundraising. How much have you guys raised, and over how many rounds?
Yeah, so we just announced our seed round. In our seed, we raised 4.125, which we were oversubscribed for, so we had to cap it. Before that, it had been funded inside the Expa Studio, which was obviously, I mentioned Garrett. This is his studio here where they incubate and create companies like this one. So they had spent money on it before, but it was all internal. And then we went and did our external round. I brought in Montage Ventures to lead the round. Who I had actually worked with in the past too. So I had a long-standing relationship with Matt Murphy over there, who's one of the partners. We had worked at a company together called Chegg back in the day. And then we brought in a number of other folks to participate who we thought could really add long-term value to the team as we grow this product. So groups like RIT Capital, which is out of the UK. Tim Ferriss is actually one of the LPs here at Expa, and he invested as well. And then Expa participated.
Yeah, very cool. Yeah, I saw Tim Ferriss on the cap table in PitchBook. I thought that was interesting. We'll come back to that for a minute. Maybe let's talk about what Expa is. I had on a previous episode Roger Dickey, who's got a search lab. Is it kind of like that, or what is Expa Labs? Yeah,
so Expa is, I would say, it's a small group of previously mostly operators who are running as the partners of the organization, and they're focused primarily on solving major pain points in the world today as they see it. So I think if you look at what Garrett, and I don't want to speak too much for them, but if you look at what Garrett and the partners are focused on, they tend to be really big, meaty problems. So real estate is one of those areas where you just haven't seen a lot of innovation until very recently on one of the largest areas of humans' lives. Another big area that they're focused on is actually air travel. So they're, Aero is one of the companies that they're building here, and they're really trying to rethink what airlines can actually be in the future around creating amazing experiences for consumers. Obviously, they're still heavily invested in companies like Uber, so transportation, rethinking transportation and local transportation. But they tend to make really focused bets on the areas that they think are areas of large impact and opportunity.
Cool. And just for anyone who isn't familiar, Garrett was co-founder, right, of Uber, or early. It's very early, right?
Yeah, he had founded Uber early on, and is still, I believe, on the board there, and it's worked out okay for him.
Yeah, the understatement, but yes, very cool, very cool, interesting. And then, so it sounds like you knew most of the investors beforehand, or did you have to get out and kind of run a process, or was this an informal fundraising? Talk about the actual nitty gritty of raising this money.
Yeah, so it was a little different in that the company had already been created. So I came in over the last 1 year, and it was a little bit different in that I have a decent amount of relationships within the venture capital community already, and was looking for something very specific. So I think the Expa team here in particular have a tremendous amount of value and understanding and in-depth knowledge of disrupting industries. They've done it in a number of different companies, Uber being obviously the most well-known, but they understand technology, and they understand disruption and sort of what that takes. But where I needed to lean in was particular types of investors who understood the real estate market. Mm-hmm. Matt Murphy over at Montage had worked with RenRen before and all of their investments here in the US. And so large investments like SoFi, Lending Home, they'd actually incubated several real estate startups. And so he has a deep understanding of what it takes to be playing in the real estate space in particular. And his partner over there, Todd, has done a tremendous amount of work in the real estate space as well. So they're deep-seated insights and knowledge in the real estate space as we think about the type of money that we wanted to get involved. So they were the only call that I made in terms of leading the round. And because of previous relationships, they were very, very open to doing so. And then we filled in with other folks that we thought would be able to provide really interesting strategic value for us in the long run.
4.125 million buys you about 2.5 houses in the Bay Area, maybe. So clearly that's not. Do you have a line of credit or a debt arm as well to help purchase these houses, or how does that work?
That's right. Yeah. So we had also announced that we'd raised a few $1 million. That is a specific fund to carrying capital on the underwriting piece. So when you think about our company, you have like the technology company, and then you have the company, the other part of the company that really is designed investing in the assets, the homes themselves. And so yeah, we raised money against that, and we have relationships with large family offices and capital partners that can help us grow that over time.
Interesting. And you don't have to, if this is getting too deep in the woods, just, we can always go somewhere else. But the lenders or investors that are actually kind of funding that part, you know, does the company get the upside, or do they get the upside when a real estate market is successful in your favor?
Yeah. So one of the major things that we wanted to think about when we built this model was, how do you align everybody so that we're all rooting for the same thing? The same way when you've got a really good crowd around the craps table in Vegas, you're all, you don't have one guy over there betting with the house trying to take everybody else down. Like, you're all on the same side of the table. And so with us, if the markets go well, the consumer, the owner of the home makes money, Haus technology company makes money, and the investors make money. If the markets don't increase or they go down, we're all also on the same side of the table. Consumer can lose some of the value of their equity, not in a way that they would in a mortgage, because they no longer have a ton of leverage based on the equity that they own. The Haus technology company, because of the way that our monetization works off of the payments, actually our payments significantly decrease. And the investor, because they're obviously betting on home price appreciation as well, can take a hit on that, will take a hit on the portion that they own. So we're very much aligned with, we want to be investing in homes and in areas and in people, and want to make sure that the value of these things increase over time so that we can all win. But in the event that something does happen, if another 2008 happens, if market happens to turn because of some unforeseen circumstances, that we're all also on the same side of that table. So we're all really aligned on that front.
Which raises another question. Why involve the consumer at all? Why not, and I could be completely wrong about this, but isn't Zillow or one of the big firms, maybe it's Trulia, actually purchasing houses? They have like a separate fund or vehicle that's actually buying houses and kind of almost flipping them in a quick way. Yeah. How does the consumer add value to your business model? Maybe is the question.
Totally. Well, we actually, I come from a very consumer-centric, really, my entire background. I mean, at Chegg, we were about reducing the cost of education and textbooks. At Trulia, it was about helping people find the right home, and same at Zillow Group. So it's my entire career has been focused on really helping consumers. Our main thing is, if we look at how consumers are today, and if you look at, the 40%-ish amount of people that are renting today, they are renting in environments where they're likely getting rental increases every year, and they're not building any equity. And so it's really hard for them to get into this thing called homeownership, which gives them the long-term stability and ability to build equity over time. And so this was a product that was designed entirely with consumers in mind, which was, how do we get people into homeownership, but in a much more flexible type of homeownership? From an investor perspective, if you want to invest in the real estate market, there's really only a few ways of doing that. One, you can buy into REITs, you can buy into home builder stocks, or you can do what Blackstone did with Invitation Homes, which is, I'm going to go buy up a bunch of rental properties and rent them. But those aren't really investing directly into the assets of real estate, except for that last one, which requires a lot of overhead operationally. What we've done is we've said, hey, if we can get the right capital partners to come in and empower homeownership in this new way, we can also allow them to come in and invest directly in the real estate market without having to set up a whole lot of operational overhead. They're just buying equity in the assets that are existing in the market. The owners are actually getting benefits of home ownership as well. And we can create a much more symbiotic relationship between those two groups versus having this, hey, I'm buying and flipping, or I'm buying and renting. It's, let's empower home ownership, but let's rethink how that home ownership relationship works, because it hasn't changed really since mortgages came to be. It's the same way you've been financing homes for 100 years.
Interesting. Yeah. There's a lot of like financial analogies I'm thinking. I mean, you almost have like, you have a loan, you have equity, and then you have like a convertible note, which is sort of in between, right? It's a hybrid. It almost like you have homeowners, you have renters. I could be wrong about this too, but sort of creating this like in between person, right? It's for the investors, it's probably better to have this person in the house than a renter who might trash it or whatever, right? This
That's right.
person has home equity, but they're a little bit like a renter in some ways because they're not fully owning the house. Is that sort of correct?
Yeah, I mean, fully owning the house is an interesting thing. If you think about, you just bought your house, unless you paid all cash, I would imagine the bank is also owning a portion of your house.
Yes.
Yeah. So, I mean, most people, they don't go 30 years and pay off their mortgage.
Right. Yeah.
80% of them sell within 10 years, and then they, or you refinance and you extend it out and whatnot. So it's really, in terms of the ownership piece, you in our model, you are the owner. You're the person on title. We're not on title. We have a typical deed of trust, just like a traditional bank would. You have the freedom to do what you will with the property. Obviously, you can't destroy it or try and sell it to your cousin for $1. There's restrictions involved because we are a co-investor, but it's full ownership. It's just a different type of financing structure that we've put together.
Yeah, no, that's very interesting. And the owner can sell it anytime they want, even if it's in a terrible market or whatever.
Yeah, that's right. We don't put any restrictions on that front.
Interesting. Cool. Were you involved in jumping around a little bit, but were you involved in fundraising at Zillow or Trulia, or did you get?
No. So when I joined Trulia, they had just gone public, and so I was not part of the fundraising process there. And then after about a year, we went through the acquisition with Zillow Group, which was, I guess it was Zillow creating this group that is now Zillow Group. So it was, plenty of discussions with the SEC as we went through that process, because we were two of the larger players in the space. But fundraising at that point was a little bit different.
Yeah, for sure. Interesting.
Yeah.
So if this takes off, I guess, kind of thinking almost from a macro perspective, hopefully it will. Sounds like a cool concept. This could get a lot more people into the housing market. Is that going to just push, and I'm thinking it personally as a recent buyer, is that going to push prices even higher if you can sort of untap or unlock this new swarm of buyers? Or what do you think is the sort of macro effects if this is successful in a scalable way?
Yeah, well, I think it'll probably depend on the type of adoption that you're going to see. So if we end up seeing a lot of folks, like in your case, already own a home and would like to lower your monthly payments and sort of tap equity in different ways, then you're really just kind of shifting the financing product within an existing homeowner. If we end up shifting a lot of people from renting into homeownership, I think that could actually have an impact on home prices, because a lot of these rental units, especially in more urban areas, are designed for only renting, not for necessarily renting and selling as condos, for instance. But I think in order for us to make that sort of impact, you would have to have a pretty significant penetration rate in a per market basis, which, if that's the case, then I think we're doing a lot more good than harm in terms of prices in the market. But that would be the goal, is to see that kind of uptake.
And, can you talk about any numbers, how many houses or markets you're in, or where are you guys at right now?
Yeah, so we just launched 2 weeks ago.
Okay.
Which is very recent. We were active in California, Washington, Oregon. So the first 3 states that we've started to launch in, and then we'll grow across the sort of eastward from here. We don't talk about how many numbers we've actually processed, but I can say that since we've launched, demand has been completely overwhelming, and I've had to tell the marketing team to shut off all campaigns because we cannot sustain the volume that is coming through currently. And I think that that's just an indication of the desire and the need for this from a consumer perspective. And when you look at the data, I think it was pretty clear as we were building this product that we were going to be tapping into something that was really powerful. I don't think any of the team was response from folks in terms of how many people are actually going through the process and the pre-qual process fast. But it's exciting to see, and we're doing our best to try and keep up with that demand now.
Is it? I know there's a lot of real estate startups that have formed, or there's a lot of innovation and things happening. Is it a competitive space? Do you have several direct competitors, or are you guys carved off your own kind of unique little thing here?
Yeah, I mean, there's competitors in different ways, and I think that people are tapping into the idea now, especially as they see the data coming through and the pain that consumers are experiencing in the property markets. That there's got to be a better way of helping people, and so I think that there are other competitors in the space that are trying to unlock equity in unique ways. There's other folks that are trying to help those first-time home buyers who don't have down payments to get into home ownership. But I always encourage folks to run the numbers on a lot of these. A lot of these models aren't new, for instance, and a lot of them can be pretty tough from a consumer perspective in terms of the costs. And so I'm always a big fan of do the research, run the numbers, run the scenarios, understand how this impacts you as an individual and as a potential owner, and see which one works best for you. I don't think there's anybody right now that's directly competitive or doing what we're doing, but I would say that the people who really kind of control this industry are obviously the larger banks, right? Most people go to a bank to get their mortgage and to purchase their home. And so I think that those, when you think about who our largest competitors are, it's probably them, and we're doing our best to educate consumers that there is a better way.
Yeah. Cool. Interesting. There's a lot of stuff going on, isn't there? The one I saw recently, I can't think of the name of it. If you have a house and maybe you have a backyard, they'll build a little guest unit. What is it called?
Well, I don't know. I don't remember the name of the company, but I remember they build these accessory dwelling units. They're called ADUs. And to try and then drive income for the owner, to increase the available housing stock in those particular areas. I mean, that's been a big push actually in San Francisco here too, as well as the East Bay, of trying to get more of these built. Unfortunately, in San Francisco, they ended up having a huge backlog, and then you have this very arduous permitting process, which has stopped a lot of these. But I mean, people are trying to get creative. They're trying to solve this problem in different ways, and there's which I think is a really interesting situation and scenario to try and solve this by increasing the stock, right? You increase the supply, you can watch the prices come down. And then I think for us, we're doing it on the other side, which is the financing side. Can you come up with a new creative financing way of actually empowering this type of homeownership to be more affordable? But I think really in the long term, both are needed if you're going to dent these markets.
How are you thinking? You guys just fairly recently launched and raised this round, but how are you thinking about fundraising going forward? I'm assuming, again, if this takes off, you're going to have to raise a crazy amount of money. Is that correct? Are you starting to think about your next round already? And what's your financing strategy?
Yeah. So crazy is the technical term there. Yeah. So that's absolutely right. We will be raising money. And I don't think a CEO's job is ever not raising money. But in this particular model, we're going to be very capital intensive. Not so much on the technology side, because I think once you establish the operations and we have a really good income stream off of this type of product, it's we can be self-sufficient. But on the capital market side and how we want to structure those debt markets and how we want to empower our investors in different ways will definitely be an ongoing process. And so we're always having conversations. I don't think those conversations will ever stop. We're not talking about specifics right now with what's coming, but there's always going to be something coming with a model like this one in the future.
Okay, one or two more questions. I'll let you get back to it. Tim Ferriss, total fanboy. I've read a couple of his books. It sounds like you guys already had a relationship with him, but my question was going to be, how did you get in front of him and get it, plugged in with him? And then how do you leverage kind of a celebrity investor like that? Do you do anything to activate him?
Yeah, so I wish I had some really cool story to tell you, or great anecdote that you could use. But so Tim knows the Expa team here very well, and has been involved with various companies that they've done. He heard about what we were working on and was obviously very interested and could see the longer term vision. So we spent some time together and kind of digging in what this could be, and was interested and decided to come in personally on the round. But we haven't leveraged him in any sort of unique social ways or anything like that. Not to say that won't come in the future, but given that we're just launching now and already seeing a little bit too much demand that we can't handle it. We haven't gone down that path yet.
What's he like to pitch? Is he into the numbers, big vision? Like, what's if anyone's lucky enough to get in front of him and pitch him, what advice would you give people?
Yeah, I mean, our conversation was very straightforward on what the potential here was. What does it mean from a consumer perspective? What's the potential impact for consumers? How is this better for them? Is it something that he understands as a pain point for folks? You may not have everything worked out, but is it viable? Does this make sense in the long term? So it was very practical conversations, and there wasn't anything surprising. We didn't get into numbers too much, really, just because we were so early. I mean, with our seed, this was before we had even launched this new product. So it was really about just, you had to be able to see the vision. You had to be able to understand where this could go. I think as you start to migrate into later conversations, as you go into A and B rounds, obviously the conversation shifts much more over towards the numbers and the performance margins and how is this all playing out. But early stage is, you're betting on the team, you're betting on the idea, you're betting on the problem and the market opportunity, and really, do you have passion for solving that kind of problem? Is it something you can get behind?
All right, very good. All right, well, Jonathan, this is cool. Do you have any last favorite piece of advice you've been given about raising capital, or growing a startup, or anything you wish you knew back when you were younger days trying to figure this all out?
Yeah, it's interesting. This business, if I look at the businesses that I was involved with previously at Chegg and at Trulia and at Zillow Group, they were not capital intensive businesses. They were more pure tech, really. And as you get into the capital intensive businesses, you start talking to very different types of people. The debt people, the capital markets, the financing folks, they look for very different things. And oftentimes they want to cram things into a particular box that they know what that box is and how that box works. And when you're really doing something that's truly disruptive or changing the way that whole structure works, it's not the easiest thing to get them to think outside of that box. And what I've noticed, especially for the early conversations, was you have to stick to that original idea and stick to your guns, right? And realize like the reason that we're doing this is because it's better. You can't try and change it too much to the point where it's going to start impacting the consumer in a negative way. I mean, obviously you want to make sure that this works with their models, but you got to stick to your guns, and you got to keep the faith. And I've realized that more now than ever as I've started talking to completely different types of investors.
Yeah.
But I think that applies across the board. Think back and remember what that original idea was and what that original pain point was, and why you were really trying to solve for that in the early part, and let that remind you as you go through the good conversations, and mostly more so the bad, the tough ones, and it'll keep you going. So.
Very cool. All right. Well, if people want to learn more, it's haus.com, correct?
That's it.
And do you prefer, or what's your sweet spot in customers? Is it people who are renting, want to get in their first house, or people who have a house and want to share the risk and upside a little bit?
Yeah, I think really it's if you're renting and you've been wanting to become a homeowner and you want that stability, absolutely, you're a target. You're a perfect customer and a perfect partner for us. If you're someone who has been owning for a long time and you want to reduce your monthly payment and you want to be able to tap your equity at any time and have full flexibility, you're also a great partner for us. So we're really looking to help people across the board. Anybody who really wants to rethink, what homeownership can be, and in a much more fair, flexible, transparent way. So.
Yeah, very cool. Okay, who? I assume you bought the name Haus. What was using it before this?
I have no idea. Actually, Garrett bought it before I got here. So,
okay.
So I don't know who he bought it from, nor what they were using it for. Maybe someone could go do the time machine and see if there was something there. But I don't know.
All right. Awesome, Jonathan. This is great. Well, appreciate it. I'll run this by my wife. I think we're so exhausted on the whole real estate purchase process. We're probably not immediate customers because we just want to enjoy the house for a few minutes before thinking about it. But I'll mention it to my wife. So
cool. Sounds good.
All right, sir. Thank you. Have a great one. We'll catch you after your next round.
Sounds good. Talk to you.